please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, then let's take a quick check on the Asian markets. Most of those Asian markets, they've opened up for trade after a long New Year holiday weekend. Remember, China is going to be in focus. The Kaizen survey of China manufacturing due is expected later today, and it's expected to show a slight slowdown. Remember, the official manufacturing PMI, that's the Purchasing Manufacturers Index, that gets released a tad bit earlier. It came over the weekend. It had come in at around 51.6 for the month of December. So that's one factor that you'll be tracking very, very closely. But, geopolitical developments, they'll continue to be in focus as North Korean leader Kim Jong-un. In fact, he declared his country a nuclear power during New Year's Day address, but also acknowledged that he was open to dialogue with South Korea. So that's going to be really the big talking point in the Asian markets today. A couple of factors. One is the Chinese data. Second factor is going to be the geopolitical risk. The SGX Nifty, though, for starters, is indicating that maybe, in fact, we're going to see a bit of a downtick. It's indicating that we'll actually start off with a cut of around 40 to around 50 points. The SGX Nifty, you align it to what the Nifty futures are. In fact, that's at around, it ended at around 10,490 approximately. So let's see what happens over there. And yesterday, in fact, the premium on the Nifty futures did increase as well. But brace yourself, it could be a bit of a somber start. But moving on to the geopolitical developments, in fact, they may resurface today as North Koreans, Kim Jong-un says that open to dialogue with South Korea. CNBC's Jerry Kang reports on what this could imply.
We won't do anything unless threatened and blackmailed by the United States. And I think that's been sort of the message, trying to give off that image of a reliable partner who happens to have nuclear weapons development program. And this is very much welcome news for South Korean government as well. So in his New Year's address, North Korean leader Kim Jong-un says that maybe the two Koreas can talk about relevant matters. Maybe we will send a team to 2018 Pyeongchang Winter Olympics Games. And, we hope that this is a successful event as well. Let's take a listen to Kim Jong-un's voice and what he had to say.
The Winter Games to be held in South Korea will be a good occasion for the country. We sincerely hope that the Olympics will be a success. We're prepared to take various steps, including the dispatch of a delegation. Officials from the two Koreas may urgently meet to discuss the possibility.
And I would argue this is going to put, of course, the relationship, the coordination or alliance that South Korea has with the United States, because this is exactly what South Korean President Moon Jae-in wanted from day one. But of course, what the Trump administration has to say about this, especially when North Korea really very much kept its threats to the United States and show off as a status as a nuclear state, very much intact in that address.
Okay, so geopolitical tensions again taking center stage in Asia. But on that note, let's also listen into what experts think are the key risks for the global markets in 2018.
Fed is going to tighten perhaps too much, and that is a danger. That is the biggest risk, I think, for 2018, is whether or not central banks really get it right. And in my view, in our view, inflation is not a factor, and therefore the case for rapid tightening does not really exist. And reality will, assert itself. I think the Fed will see that there is not much inflation there to speak of. Yeah. And from that standpoint, why should it not continue? Some of the large tech companies, I think, had a good run, but they will have a better run in 2018. And the general transformation of the economy toward the service sector is continuing very, very rapidly. And I think that will support things. People are a bit worried about construction in China, whether there's a slowdown. I'm not really concerned about that. I think infrastructure still will be a major driver.
In his first tweet of 2018, US President Donald Trump has lashed out at Pakistan and has threatened to withhold US aid. In his tweet, Donald Trump says, and I quote, "The United States has foolishly given Pakistan more than $33 billion in aid over the last 15 years, And they have given us nothing but lies and deceit, thinking of our leaders as fools. They have given safe haven to terrorists we hunt in Afghanistan with little help, no more. End of quote. Meanwhile, Pakistan has said it will respond to Trump's comments soon. Remember, last week, New York Times had reported that the US government was considering withholding $255 million in aid to Islamabad.
Okay, so as we enter 2018, what's the outlook for commodities? Here is Jonathan Barrett with some opinion coming in.
We left 2017 with good demand, copper market doing exactly what it wants to do, the spread continuing to blow out. For all intensive purposes, I think that trend's going to continue. And I think when we look at copper in 2018, there are some good things happening in that market, and we should see prices, in my mind, move up through that 8,000 mark. As we traded into 2017, gold had a good lift. It has very strong, a very good performing metal, and then it languished towards the close of 2017. So I'm starting to think, particularly with we've had that recent rise, we've had a good rise, you know, from that 1250, 1270 area. We're trading above that 13 area. So in my mind, I think we're looking for quarter one, quarter two for the same. When I come and look at the cryptocurrencies, what's happening there, I tend to discount it. You know, as we've said before, irrational exuberance in the market. You can't invest in a market that's volatile, so I don't think there's much play in that. I think gold will trade on its own merits, a little bit more positive in 2018.
Well, yesterday things looked okay. It was New Year's. The markets were more or less stable till around 2 p.m. And in fact, if you just pull up the intraday chart, you'll see the way the Nifty sold off just in the last 60 minutes or so. Not just that, even the mid-cap index was a relative underperformer by the time we wound up. In fact, it came off the high point of the day. It outperformed for majority of the trading session. But what stood out is that on January 1st, the volumes, in fact, were quite high for the first day of, a calendar year. Well, Anisha, I've been looking at this data in the past. Yesterday, the BSE and the NSE cash market volumes were at around 31,000. I've seen, the first trading session of many calendar years when that hasn't even crossed 15,000 or 16,000 crores. I've even seen 10,000 crores there. So volumes clearly were high. It appeared the DIs were the big sellers yesterday.
Well, yes, clearly it did look like that because you're talking about the volumes. Well, the FIIs bought around 300 odd crores, but there also the volumes in that sense were a bit thin because the gross number was 700 odd crores. But the volumes, after you're talking about the DIs, the sell number of 1300 odd crores is what they did. And probably they're taking some money off the table and a bit of profit booking coming in there. And that is why we saw that sharp slip coming in the last hour of trade. Well, the underperformance actually came from the Bank Nifty space because that one is now below the 50-day moving average. The volatility index on the other side gained. That was up around 5%. That one closed above 50 and 100-day moving average. But if you're looking about cues today, in terms of the global cues, there aren't much because the US and the European markets were shut on January 1st. So we have no cues coming as far as the Western world is concerned. In terms of Asia, Japanese market is shut today, so we are not getting rates on Nikkei. But other than that, we were looking at Straits and Taiwanese index. The last time I checked, they were holding mildly in the green. Remember, for Singapore, the Q4 GDP data came out. It was 3.1% higher year on year. But in terms of sequentially, we have seen a growth of around 2.8% as far as GDP is concerned, versus an estimate of around 2.9%. So pretty much in line coming in there, and we are seeing the reaction in the markets as well. Pretty much flat as we speak. In terms of China, we are expecting the Caixin PMI data to come in through today. So let's see how that one fares. Shanghai as of now is trading with gains of around 0.2%. But what is weak in Asia is SGX Nifty. That one is suggesting a downtick of anywhere between 40 to 50 points. So that one would start on a bit of somber note. Let's see how it ends. We have seen very wild moves coming in the last hour of trade. Let's see if that is what the case is today as well. But in terms of other domestic cues, we have the core data that came in yesterday. Well, the number came in at a 13-month high at around 6.8%. We have seen a sharp spike when it comes to growth in cement and steel. So maybe we'll see a bit of reaction on that end. But on the flip side, coal, natural gas, electricity were all down sequentially, and that is what did not fare well. Remember, today is the IIP data expected as well. Now, economists believe that given this core sector data, we might be looking at a decent IIP of anywhere between 5 to 6%. Lastly, just keep an eye out on currency as well. Well, yesterday, rupee ended at the highest level against the dollar since August 8, 2017. So something that the economists are keeping an eye out on. But Nigel, as far as the start is concerned, that definitely looks like it's going to be somber yet again.
Well, you know, we have our ticker team that's putting out an alert, and Anuj is telling us that, in fact, yesterday, remember the SGX Nifty, we were comparing it earlier as well with the Nifty futures. Now, yesterday, the Nifty futures were down roughly around 50 points, I think. So, though the premium expanded. So, what Anuj is saying is that the SGX Nifty basically is aligning itself with what happened yesterday. And that's why, in fact, it's down close to around 51 points. So, just that's an alert out for our viewers. But, Anisha, you were telling us about various, sectors that would be in focus. Stock specific, what would you look at?
Well, yes, I'll look at Infosys first off, because remember, Salil Parekh will take up as the MD and CEO starting today, so we might see a bit of reaction on that one. Other than that, the auto sales continue to trickle in. TVS, it was a good set for that company because the total sales are up around 39%, so that should definitely see a green tick today. Eicher Motors on the flip side, a bit of tepid number coming in, just that below estimates. So the total sales came in at around 66,900 odd number versus an estimate of 72,000 odd crores. So that bit of miss coming from Eicher Motors. Idea Cellular will be on focus because there's a board meet on January 4th where they are going to consider raising some funds. So we might see a bit of reaction on that one. Lovable Lingerie, there's an offer for buyback. It is expected to open on Jan 8th and close on January 18. They're looking to buy back around 20 lakh shares at a price of around 250 per share. Right now, the stock is trading at 237, so we might just see a technical reaction there. Thermax, a good news coming for the company, wherein they have bagged an order worth around 327 odd crores. Coal India, well, the December offtake and output numbers came in through. The offtake number is just very close to the estimate at 53.44 million ton versus a target of 53.84. Output just slightly missing their aim there. In terms of other reports coming in, we heard that a PFC, REC, SBI consortium has agreed to lend around 11,000 odd crore rupees to NLC for a power plant in UP. Remember, this is what they had done earlier in the year in 2017, and now the fund coming in for this particular project sounds good news. In terms of the other news coming in, just in the morning we got news for Dr. Reddy's, wherein they have got US FDA not for one of the drugs. So that also might just see a bit of positive reaction, Nigel.
Okay, all right, Anisha, thanks so much for that. But the big question is, where are the markets headed in 2018 and which sectors will do well? Here's some opinion coming in from Gautam Sinha Roy of Motilal Oswal Mutual Funds.
On the macro side, things are definitely worsening a bit, and yields are already pretty high. And I feel that yields are actually capturing in most of the negatives around macro, while the equity market is not reacting to it at all. It's a bit of a dichotomy here. But yeah, overall, from a NIM perspective, especially for players who are not very competitive on the cost of fund side, it will be a tougher year going forward. That does two things. Essentially, that makes it tougher for the smaller guys to grow very aggressively. Also, it skews the competitive landscape in favor of the more moated, bigger guys with lower cost of funds and lower NPAs. Auto sales tend to accumulate in a few years, and then we have a few bleak years. So we're coming out of a very long bleak period. So hopefully there is very good growth for the industry ahead, and that is what we are playing for. Valuations, of course, have changed meaningfully on the higher side. But that having said, the quality of the franchise, moatedness of these companies, they have also increased. So nothing to worry about, I would say. And let's hope that 2018 augurs well for demand recovery, not only for passenger vehicles, but for in general consumer, rural consumption, all those themes, hopefully on a low base finally start to pick up.